what are going to continue to drive grain prices here in the near and intermediate term. You know, we're trying to get a sense for kind of a shift that we've seen over the last month in terms of exports, you know, what kind of impact that will have on the carry. And so those are the numbers at Longleaf that we're really focusing on here as we go into the report.
Are you concerned about any outside market factors this week or not, or are they going to take a back seat, things like the dollar and the crude oil?
No, I mean, the outside market factors are very, very important as we move on throughout the week. You know, as we're kind of shifting our attention to the South American harvest, you know, there's a tendency for U.S. grain to kind of play second fiddle for a bit as the, you know, the international market is trying to position for, you know, importing South American grain. So in order for U.S. grain to remain competitive, it's important that the dollar doesn't catch a strong bid here this week.
Okay, let's take a look at our current prices. We'll go to the trading floor direct prices from the Chicago Board of Trade and CME Group there. We have the March corn now trading a penny and a quarter higher at $3.59 1/4. So now we are closer to the high of the day than we are the low, getting just 2 ticks away from our high. May now 1 1/4 higher at $3.66. So a bit of a turnaround here in the corn market so far. On the soybean trade, we started out with pretty good support. They added to it about mid-session, and now it's kind of easing back a little bit. We have March soybeans now 5 higher. Last trade now $9.99 3/4. So it's just slightly back under the $10 benchmark. Got as high as $10.04 3/4 earlier today. On the wheat trade in Chicago wheat, we have March now trading 3 3/4 higher at $4.27. That's a rebound of 6 cents from our earlier low. In the Kansas City wheat market, March is now trading 3 1/4 higher at $4.36 3/4. That's a nickel off of its low now, within a penny of our high of the day. And on the Minneapolis spring wheat trade, here you have the March contract 2 1/2 higher at $5.55 1/4. And looking at that cotton market before we get into our break, we have that March contract now quoted at 73.73. That would be down 26 points. Well, that's the latest on our crop markets. We're going to come back and look at some of those outside markets, and we'll talk a little livestock with Tim Evans when we come back. Well, we're back with you on the Market Day Report. I want to focus on our U.S. dollar and crude oil market temporarily here, and then we'll bring Tim Evans back in, and we'll talk about livestock trade. Let's go to the dollar index right now. Currently, the March futures are trading 230 points lower. They're quoted at 101.980, so they're under 102 now. June down 230 points. The crude oil market has really taken a beating this morning. We have February futures now down $1.61. This is West Texas that we're looking at. 52.38 is the last price per barrel. The heating oil trade has also struggled. So far on the heating oil market, we have February down over a nickel at 165.1 per gallon. Now let's bring back Tim Evans. He's at the edge of the trading floor in Chicago, and he is with Longleaf Trading. Tim, thanks for joining us here as we take a look at the livestock sector. Last time we checked, we had the hog market kind of lifting a little bit off its earlier lows, the cattle market too. Let's take a look at where they are now. Nearby is actually a little firmer on the cattle now. February live cattle 20 higher at 115.02 per hundredweight. April up 28 at 114.48. So they're getting back up there within 20 cents of their high of the day now. How about feeders? Feeders, we have March now 20 higher at 124 even per hundred, over $1 off our low. April up a nickel at 123.75. So finally a little bit of a sign of strength here in the cattle market, albeit very weak. It is a little bit of support anyway showing up.
Yeah, I mean, it's we've seen a little bit of a turnaround here today. I think really what we ran into is a market effectively being in a technically overbought condition, and that's why we've drifted here toward mid-late week last week and kind of began the week with early weakness. Our view at Longleaf is that we'll probably continue to see some weakness in the market. We feel confident that 112 level and February live cattle, should provide pretty good support in the market here in the near term.
All right, now let's take a look at our lean hog trade. We'll see what's going on there. And here we have had triple-digit losses in the early going on the nearby contracts. Right now, your February contract at 63.02. That would be down 96 cents in value from our close on Friday. We have come off our earlier lows of the day by about $0.50. April currently down 58. at 67.62 so far today, and the May contract just down 2 cents. Interesting that you have the nearbys, which are already heavily discounted to the future months like June, actually widening out that spread even more today.
Yeah. I think what we're ultimately seeing is some evidence of some of the things that you and I had actually talked about, going back about a month ago. And it's the export story. The December export numbers were not good. The week ending December 29th, that was the worst week in terms of exports we had all year. The week ending December 8th was the second lowest. And so two of the worst performing weeks in terms of exports, we're wrapping up the 2016 calendar year. So, the concern that we talked about was, the impact that the strength in the dollar and the weakness in the peso would have in terms of exports. And we're seeing that now reflected in the market, and futures prices are pricing that in.
Well, and it's a good point you bring up, because when the dollar surged like it did, we had the beef and pork exports last week. Very, very dismal. It was a big disappointment to the trade. Hopefully things will turn around here this week, and we'll get the new numbers on Thursday to see what kind of export sales we rack up. Tim, good to visit with you again. I hope you have a great week.
Hey, Marlon, nice to see you.
All right, Tim.